If you're heavily invested in the stock market, then extreme volatility and periodic crashes can make it awfully tough to sleep peacefully at night. For instance, in the crash of 2008, investors gave back nearly $8 trillion in wealth to the market. In 2020, whipsaw volatility once again triggered anxiety and fear among many investors, as the broad markets took them on a stomach-churning roller coaster ride. Fortune magazine reports that a confluence of factors has come together to bring about some of the worst and most value-destroying behavior by individual investors. These threats to your stock portfolio include newly granted access to high-risk markets, historic levels of credit extended to non-professional traders, and an absence of other outlets for risk-taking behavior. Result: a dire situation where many retail investors are losing money hand over fist in volatile and opaque markets they don't fully understand. Owning stocks without portfolio diversification leaves your nest egg vulnerable because the stock market can experience dramatic highs and lows.
Even over a long period of time, a return on an investment in the stock market is never guaranteed. And for stock investors, nothing is a sure bet. That's why our company, Max Returns, helps investors take a safer middle road: private lender mortgage notes. In an economy with 1% bank certificates of deposit, 2% stock dividends, and 3% bonds, 8% returns from our high-yield private lender notes with safety can build your wealth faster and safer. But private lender mortgage notes give you something stocks and bonds don't: 100% downside protection. How? Simple. Each private lender mortgage note our customers invest in is tied to one of the specific properties Max Returns owns outright in our large portfolio of residential real estate. Every note you invest in with Max Returns is backed by hard asset collateral. You will never lose even one thin dime as an investor in our private lender notes. That's because the collateral assets are worth 25% more than the total value of the notes they secure. So, if needed, we can simply sell some of our assets, ensuring that every investor is paid back in full. Principal plus yield. No ifs, ands, or buts. That way, return of your principal is 100% guaranteed. Again, because the value of the hard assets backing up our notes is greater than the price of the notes themselves. That's a level of safety that the stocks simply cannot match. So, when the market takes a sharp, bearish nosedive, you are completely shielded against the possibility of any losses. That way, Max Returns private lender notes help build your wealth by following Warren Buffett's rule number 1 for investing: never lose money. What's more, because private lender notes have no fees, they can put even more money in your pocket. For example, financial advisors charge 1 to 2% a year to manage your money. On a $100,000 investment with a gross return of 8%, the fees are actually costing you 19% of your earnings, which in 20 years can deplete your wealth by a whopping $89,000. Let's review the many advantages of private lender notes over investing in the stock market. Private lender notes offer preservation of capital, while the share prices of your stocks can quickly plunge, reducing the value of your portfolio by 15% or more in just one day. Private lender notes generate consistent annual returns of 6% to 10%. Volatility makes stock annual variable and inconsistent. Both private lender notes and dividend-paying stocks can offer passive income. Day trading stocks can be considered active income. Investing in private lender notes entails much lower risk than owning individual stocks. Private lender notes never depreciate, ever. While many factors, from failing to meet quarterly earnings goals to trade problems with China to negative news, can cause significant and rapid depreciation of your stocks, private lender notes are secured by tangible assets. Stocks are backed by nothing more than the paper they're printed on. Zero fees for private notes versus the 1% to 2% fees for managed accounts that can quietly eat away at your wealth. Next, we urge you to take a look at our additional video lessons. They compare private lender notes to financial instruments, including mutual funds, T-bills, bonds, CDs, rental properties, so you can make the investment decisions that are right for you. Action step. Just click below to choose your next free lesson and watch the video now. You'll be glad you did.